Ben ritrovati giovedì mattina su floor del New York Stock Exchange, giornata davvero molto importante. Pochissimi istanti fa sono arrivate le indicazioni da Washington, dalla Corte Suprema, che quindi conferma almeno in parte, nelle parti principali, quella che è la riforma del sistema sanitario di Barack Obama. Ne parliamo con la mia ospite qui su floor, che è Doreen Mogavero, fondatrice e presidente amministratore delegato della floor broker Mogavero Lee Co. Doreen, thank you so much for being with us.
Thank you very much. It's a very interesting day, isn't it?
It's a very busy and interesting day, absolutely.
Day as well, I think.
Yeah, and we had a very bad reaction from the market. The market is going down. It was Dow Jones. It was losing 180 points right after the decision arrived from the Supreme Court. What does it mean for the market?
Well, I think that it certainly indicates that there's going to be a policy shift that is unlike anything that we are used to in the United States, and obviously that this sort of a shift is going to be acceptable. So that is the bigger picture. You know, we're going in a different direction than we've gone before. That being said, I think that the details of the report, I have not read them all, and I have to do so, and I think so do traders. So I think you're going to have an initial sort of period where we're going to sit down and really analyze this and see what it means, and particularly to each individual stock and sector. But initially, the market obviously doesn't like it.
And it was kind of unexpected too. I mean, one of the very conservative judge in the court decided to go with the liberal wing, and actually he was a deciding vote. So everybody kind of surprised about that. And now the political implication in an election year, it could go really either way. I mean, the Republicans can still campaign on it because the law is still out there, and the Democrats and maybe Barack Obama will come out a little bit stronger out of this?
Well, I think certainly he's got to be feeling a little bit more secure about the health care bill. But I think, I have to tell you, I think it was a coin toss. I don't think anybody really had any strong sense of how this was going to come out previous to the actual announcement. I think the election, in many ways, people are feeling as a coin toss. I do think that Mr. Romney has picked up steam in the last couple of weeks. I think that's, it's clear now, I think that Wall Street has backed him pretty much. Business, not just Wall Street. I should clarify that. Business people are backing Romney. More money is going to his campaign from business than had previously. So I think that this is going to be helpful to Mr. Obama, I believe. But I think it also is going to polarize us even more, which is another issue that we'll have to learn to live with too.
Yeah, and it will make this year even more peculiar because, you know, as you were saying, probably really is going to be a coin toss until the end.
And the problem with a lot of this is that politically, you know, we seem to be at a place where we can get nothing done. And that's probably not a good place to be. I mean, the Europeans are facing that now. Hopefully the summit will prove to come up with something. I mean, I think most people are pretty doubtful that that's going to happen. But I think
especially after that Angela Merkel again said there is no chance we're going to have Eurobonds.
Yeah, so I mean, I think, you know, we're all in a place that we're just sort of stuck. And that's, I'm not sure how good that is, and I'm not sure what that will produce, and I'm not even sure if we've ever had a place like this in history before for such an extended period of time across the seas, you know. So I think it's going to be an interesting time until November, for sure.
And now let's talk also about the end of this quarter, waiting for November, waiting for the next big catalyst. At the end of the quarter, we can already see that the balance has been pretty negative for the market, especially for a few sectors in particular, energy, financial, and technology. Of course, these couple of days are going to be pretty volatile. We don't know what is going to happen today in Europe and tomorrow in Europe. I mean, do you really think this is a tipping point?
Well, I think it could very well be. You know, July 9th, I believe Alcoa starts earnings seasons again. And, you know, we always get back to the fundamentals at some point, and I think earnings are what drive the stock market. And I think this earnings season, I don't think will be as promising as past earnings seasons. And I think that companies guided last quarter, a little bit more cautiously to prepare us for what might not be the greatest earnings season that we've ever seen. So I think under that premise, you know, retail investors are still not coming back into this market. Outflows are still coming out of the market. We're seeing people using short-term strategies if they decide to trade. They're using a lot more ETFs and a lot more options. That continues. That volume continues to grow while equity volume continues to drop. So I really think that if you put all of that picture together, I think you're going to see that there's going to be much different mood between now and November than there has been in the beginning of the year.
Plus, we're in the middle of the summer too, so it's usually quiet. It's going to be probably even more quiet until November.
I mean, there just doesn't seem any point to place a bet right now, because if you're going to be wrong, you're going to be really wrong. So the only people that are going to place that bet are going to be people that can afford to withstand it, you know. So I think there's going to be also a reassessing of people's personal comfort levels. They're going to certainly reassess their own financial positions. Will they be prepared if things get worse? You know, and as always, we'll be looking at the jobs numbers, which were basically benign today, which is probably not a good thing either. So I think although things sound, you know, the good news is, as I keep saying, every day is a day closer to a resolution, I suppose. Even if it's 10 years out, we're still a day closer. So, so we have to be a little bit more positive.
So we'll see. And also we'll see the effect of this decision on the market, probably more long term.
Yeah, I think so. And I wish the market's still going down. So, but the volumes, again, are absolutely nothing. They're nothing. It's nothing. You know, the volatility index is up again today, too. So that's also a sign of fear from the investors. So I think we're just going to have to wait this one out.
We always talk about waiting and waiting. I mean, really, November cannot come soon enough.
No, it can't. It really can't. And the problem with November as the sort of tipping point, if you will, is that, you know, this fiscal cliff that we're about to fall off is going to be maybe almost unavoidable by that time, because, you know, if companies are going to lay off workers, they've got to give them, in general, 60 days notice. So they will be giving them notice before the election or right around the election, regardless of the outcome, based on what they think might happen. So you could see, even if we don't fall off that cliff, you could still see a problem at the end of the year. So I think it's a very tenuous time for sure, for sure.
Okay, let's brace ourselves and let's wait for good news.
Yeah, but we'll be okay.
Thank you very much, Doreen, for being with us.
Thank you.
E grazie a voi per l'attenzione. A domani.